Rio Tinto and BHP Billiton have abandoned their plans to form the world's biggest iron ore joint venture. The world's second and third biggest miners had wanted to link up their huge iron ore operations in Australia and save some $10 billion by sharing rail and port operations. Steelmakers were pleased by the miners' decision, as they'd worried the joint venture would lead to a monopoly. Analysts say abandoning the cooperation is a blow for both companies, but now leaves BHP to concentrate on its bid for potash, the world's biggest fertiliser maker. It looked like Rio and BHP were going to call off the $116 billion deal after European regulators indicated they would block it.
Sales at Philips Electronics rose in the third quarter, beating forecasts. The world's biggest lighting maker reported pre-tax earnings of €648 million, $113 million more than expected. Philips said its programme of cost-cutting and sales of consumer goods in emerging markets had helped, but it was cautious about future sales growth and said it wouldn't be able to rely on shoppers spending as much in the fourth quarter.
BP continues to sell off assets to pay for the oil spill in the Gulf of Mexico. This time it's a package of oil and gas fields in Vietnam and Venezuela. The British oil major is selling them to its Russian joint venture TNK-BP for $1.8 billion. The deal takes the total asset sales agreed by BP over the past few months to $11.5 billion. But that's still a long way from the $25 to $30 billion it wants to shed over the next 18 months. BP shares closed up 1.5%, drawing support from a rally in crude oil, which topped $82 a barrel. European shares rose with banks boosted by upbeat results from US lender Citigroup. The FTSE Eurofirst 300 was up 0.3%, while French bank Crédit Agricole rose 1.7%. Philips was an exception, down 4.2%, while BHP Billiton and Rio Tinto were slightly down. The euro lost against the dollar, falling below 139, while sterling came off an 8-month high against the dollar.